Welcome to Galaxy Brains.
An infinite amount of cash.
I'm your host, Alex Thorn.
The U.S. banking system is sound and resilient.
Bitcoin made a new all-time high.
If you're not long, you're short.
Satoshi's going to come on there, laugh hysterically, go quiet, all Bitcoin's going to be erased.
Bitcoin's the best crypto out there.
Bitcoin is going to zero.
Welcome back to Galaxy Brains. As always, I'm your host, Alex Thorn, head of firm-wide research at Galaxy. Bitcoin's not zero, and we have a great episode for you this week. Jason Urban, Galaxy's global head of trading, is our guest. He is back. And we're going to talk with Jason about one of the most interesting and widely discussed topics in markets, which is the Bitcoin and crypto treasury companies. Just a couple months ago in May, when we released our Q1 lending report, we had a table of the 33 or 34 of these such companies that we are aware of. I'm now told by Jason that he's aware of over 175 of them. What is happening with the treasury companies? What do they mean? Are they a risk? Are they an opportunity? We'll get into it with Jason. We'll also talk about international expansion of Galaxy Trading and what he sees in other global markets as it relates to crypto. Bimnet Abibi is off this week, so we're going to talk with Michael Harvey, Galaxy's head of derivatives, about markets in general. Unemployment came in soft, still got Trump beating up on the Fed chair, and a couple other interesting things. Before we get to that, I need to remind you to please refer to the link to the disclaimer in the podcast notes and note that none of the information in this podcast constitutes investment advice or an offer, recommendation, or solicitation by Galaxy or any of its affiliates to buy or sell any securities. Let's hop right into the show. Let's go now to our guest, Michael Harvey, head of franchise trading at Galaxy Trading. Michael, welcome to Galaxy Brains.
Thanks very much. Excited to be here.
Very excited to have you. It's always nice to talk to people that aren't Bimnet. No offense to Bimnet. Love him. But it's rare that we have a different person sit in for Bimnet. He's on vacation, as I said at the top of the show. Michael, you see client flows. You see market flows. You're a volatility expert. Just right off the bat, what does this market feel like to you, generally speaking?
This market feels priced to perfection.
So not bullish, not bearish, just perfectly in the middle?
Yeah, I mean, we're climbing the wall of worry, right? Equities are within a breath of all-time highs, which I think they reached last week.
Mm-hmm.
Financial conditions have been easing since April. You've got still a couple of rate cuts priced through the end of the year, 52 basis points, I think. So, just a little bit more than 2 cuts priced.
Mm-hmm.
You've got a market that's disregarding the potential for the tariff, monster to come back.
Right.
Which I think is the point where we're, everything is Goldilocks right now, and you've got the market back to the highs. You've got benign inflation. You've got good, labor market numbers with payrolls beating last Thursday.
Mm-hmm. Unemployment coming, 4.1 at 4.3 expected?
I tend to look at the payrolls number just, more than the unemployment. But, there's a lot of things that go into the unemployment, like participation rate, for example.
Yeah.
But everything is benign.
Everything's
right?
pretty
and
decent.
All the fears from April when the tariffs were announced have been pushed firmly to the back of people's minds. You've got a strong retail bid in equities, for example.
Mm-hmm.
I just think, everything is so perfectly priced that the one thing that Trump wants and needs is lower interest rates.
And that has been shifted out. I mean,
yeah, exactly. And you've got several people on the Fed, the minutes came out an hour and a half ago, several people on the Fed saying, we're not quite sure that we need, the magnitude of rate cuts that the market was pricing previously. We may be closer to the neutral rate going forward than we think, right? But Trump needs lower rates. And this gives him the dry powder to be a little bit more belligerent on trade.
So you're saying he's got a little bit of a longer leash because he could go hard on markets. Everything's looking pretty good. So it's not like, markets are currently nice. He could go and, be harsher on trade. And if markets react negatively, then a positive side effect is likely pulling forward rate cuts.
Correct.
Yeah, which he wants.
Yeah, he's also got his big, beautiful bill.
That's right.
Passed, which is 20 to 50 basis points of added GDP, but 300 odd trillion of debt or whatever.
Yeah. I think 3 or 4 trillion over 10 years.
Yeah, sorry, not 300.
But yes, I mean, like it's not paid for.
I think it's 300 billion additional debt.
It's near term
and then
bullish and
then
long
a
term
5
bearish.
trillion deficit. Yeah.
Yeah.
And so,
But it spends a lot of money in the economy, is your
Right.
point.
So it juices the economy short term at the expense of potentially inflation.
Yeah.
Right. And so you get this scenario where the Fed's cutting into a potentially inflationary backdrop, which causes the yield curve to steepen, which is a trade that, everybody's got two trades on, right? One is short dollar, the other is the steepener.
Yeah.
I don't see any reason necessarily for those trades to stop working. DXY is taking a little breather. I think it can go another, 5 to 10% down pretty
It's what
easily.
It's like 97 right now, DXY.
Yeah, exactly.
Index,
and if you look back, if you sort of zoom out on the chart, it's still a little bit above sort of long run average.
Yeah.
So it can go a little bit lower from here. But yeah, I mean, everything points to, I think, right now it's very benign. So there is scope for a pullback if he gets more belligerent.
I see, and he's got a little bit of leg room. Who knows? Right now, I think he said on tariffs that what was the headline we saw? Like August 1st.
August 1st, basically.
And that one I won't extend. He's saying basically.
Yeah, you can't take anything he says at face value. I mean, basically, Basen asked him to push out the deadline.
Yeah.
Right. The deadline was today.
Yeah.
They've pushed it out to August 1st. They've sent all these form letters out, which is a little bit comical. I expect. Really what's going to move the needle is Europe and China. Yeah. Right. And they haven't sent letters. They're still trying to negotiate. I still think you want to watch India and Japan for potential deals. Look, if we start to get deals, then, we won't get the pullback. But I think there's just a potential that, that he starts to make a bit of noise, again, with the view to making sure that we get those rate cuts.
Yeah. He needs them. It's part of their policy plan. They need rates lower. Remember one of the main things, they want the 10-year down, and it's been stubborn.
It's going to be hard to do that, though.
Yeah.
Right? The Fed controls the front end of the yield curve.
Yeah, and also the market feels like now just little short-term things and gimmicks aren't going to do it. Like we need long-term fiscal sanity, and you're not getting it at all.
You're not going to get that until you get, I think until you get rampant inflation.
Yeah. Let's talk about the Treasury companies. I know, there's a lot of them. We talked with Jason in the upcoming interview about sort of the high level, but are they buying? I mean, we know MicroStrategy is buying. Who else are we seeing? Are we seeing actual flows? I got tons of announcements, but are we seeing any flows?
Yeah, I mean, absolutely. You've got MetaPlanet doing their thing. It's a bit unique just given the mechanics in Japan, but they're buying. There's a lot of copycats that are buying as well. The theme of recent weeks has actually been, the ETH Treasury companies, and ETH is getting a lot of eyeballs recently.
I mean, Tom Lee, he upset a lot of Bitcoiners. He's a long-time Bitcoin bull, and he was saying things like ETH is the next Bitcoin. I think was literally the quote. And first of all, we know he's a lot smarter than saying, we know he doesn't literally. He must mean ETH Treasury play is the next Bitcoin Treasury play, or sort of it's the next institutional asset in his mind. But that's still, nonetheless, that's a big deal. Tom Lee, he's a fun strat. He's a big investor.
Yeah.
He's also perpetually bullish and has mostly been right about that. I feel like, remember if you looked at the start of the start of last year, there was the predictions and it was like everybody was bearish and had different things, and Tom Lee was just unabashedly calling for 6,000 S&P, and was right. It was by far the only one that was right. But he's just a perma bull.
Yeah, I think the Treasury company stuff is, people are going to wring their hands over it. Is this bad for Bitcoin? Not in the short term, right?
Yeah.
No one's hand gets forced in that game. I think for longer than the market is, or longer than some pundits are saying, right?
Yeah.
This is I liken this, and of course it's completely different. But from a psychology perspective, to me, it feels like we're in, 2004 or 5, approaching the great financial crisis, right? People knew the property market was a problem 3 or 4 years before anything actually happened, right? And you just sat there and had to deal with it for 4 years, knowing that it was unsustainable, and yet it just continues to go, And I think psychologically we're in that position right now with Bitcoin Treasury companies where, they're not all that levered.
Right.
And they have a long time before they have any kind of, debt to roll.
Most of them are pretty small. I mean, Saylor is obviously huge, but I think it's 18% debt to his Bitcoin NAV. It's really not that much. And then the other ones, to the extent they even use debt, and I think many of them will not be able to really tap debt markets, they're just pretty small. Even if they raise $1 billion, like that's not that big. So I agree. It doesn't feel, but there is that sense, to your point about the, like before the housing crisis, it does just sort of intuitively feel risky. It feels like it's leverage and it's like.
Well, and to your point, it doesn't have to blow up spectacularly. You just have to have know, some of these equities start trading below their their NAV essentially, right?
And then they can be like a
then
drag.
They can't buy any more, and then they're kind of just a zombie company.
Yeah.
They can go out and they can sell their Bitcoin and buy their stock, but what is that?
Surely
that's not great for the whole
I don't know, but
complex.
like surely it's one thing for like many companies to have Bitcoin or digital assets on their balance sheet. Like that's fine. They own a lot of stuff. But this like all one asset treasury strategy company, surely there can't be 200 of these things. Like how big, how many can the market bear? And I know there's different capital markets, and maybe like you mentioned, Japan has these weird rate dynamics, and there's other jurisdictions have capital control. So maybe there's good reason for one to be here and here, or like, but like I mean, truly, how many of these can there really be? I mean.
I feel
we're about to find out.
Yeah,
right?
we're going to find out. I think
Yeah.
I think there'll be some consolidation.
Yeah.
Right. Like as with everything else, is there a reason to have one or two of these things per jurisdiction, per geography? Sure.
Yeah.
Right, where they really can do it at scale and they can issue the debt and follow the Saylor playbook.
Yes. But 5 or 10.
Well,
20,
hundreds? No.
Hundreds. Yeah. We are going to find out, though. I guess that's going to be exciting. I wonder how long it takes for us to find out. Maybe a year. There should be some clarity.
And again,
over the next year.
I think the ones that don't grab the public attention will just start to trade below their NAV value, and then they'll just be a takeover candidate.
Yeah.
Right. Some bigger treasury company just comes along and says, "I'll take your Bitcoin for 80 cents on the dollar."
It's so interesting. Yeah, I agree. I don't think a lot of people ask me this. They feel that intuitively feel there's real risk here, but. Yeah, I mean, the only real risk is that they sell some of their Bitcoin, and they'd only do that to close a shortfall. I think I guess the other risk is that, like, I mean, if there's hundreds, I mean, how many of these can actually be managed very well? Like, they could screw up.
Yeah.
Some could screw up.
Yeah, again, I mean, look, to me right now, they feel like they're more diamond hands than an ETF holder.
Yeah.
Right? They can sell anytime they want.
We did that chart, and it was, and it's MSTR and Metaplan are the only ones that I actually pulled. I think they're really the main sizable buyers from the corporate side, and they just buy all the time, no matter what. And the ETFs were huge inflows in January, huge outflows in February, more moderate outflows in March, then inflows in April. Like it's much more volatile, the ins and outs. You're right.
Yeah, we thought a lot of the outflows in Feb and March were really the people that had the 1 year of holdings, right?
Got it.
So
that makes sense.
Cap gains related.
Yep.
But broadly speaking, just to go back to tie it all together between Bitcoin and macro, you've got relaxed financial conditions, you've got a big spending and tax cut bill, you've got potentially lower rates. Like it all screams to at some point, like dollar debasement.
Yeah.
Right. So that's a theme that, of course, everyone's keyed in on if they're looking at Bitcoin. But we see hard assets are going to benefit, right? And that's one reason why the stock market's higher as well, right? Is people are pricing in, printing money, right? So that's good for stocks, it's good for gold, it's good for Bitcoin.
Mm-hmm. Well, there you have it. It's going to be an exciting summer still. I thought it was going to be. It definitely has not been sell in May and go away. By the way, like we've had a pretty uproarious June. Was a big month, right? I mean,
it's quiet, but again, you've got a looming tariff deadline, you've got a debt ceiling,
right?
Debate coming up.
Yep.
August and September is kind of analyst best estimate. So
Yep.
there's going to be a few things on the horizon to keep us on our toes.
Well, we'll be here, and I can't wait. Thank you, Michael Harvey, head of franchise trading at Galaxy.
Thanks very much.
Let's go now to our guest, Jason Urban, global head of trading at Galaxy. Jason, welcome back to Galaxy Brains.
Yeah, thanks, Alex. This is great to be here. I always love chatting with you. It's better when I'm chatting with you when we don't have the cameras rolling.
It is.
But this is good.
It's always good to have you on, and we've had great episodes with Jason in the past, by the way. So check those out. We talked about Jason's affinity for the rail car business, Jason's time in the commodity pits in Chicago. We've already talked about that stuff, so let's
Yeah.
actually talk about some real stuff that's going on. I would say, let me kick it right off with the topic du jour in markets, which are these treasury companies, mostly Bitcoin treasury companies, but over the last 2 weeks, we're now seeing a bunch of altcoin treasury companies.
Yeah, there's a ton of these. This is very much the in vogue trade right now. We're obviously engaged with a lot of them. Some of them have been public, some of them haven't been. I think one of the powers of Galaxy is that we can help out, a service provider, manager, and we have the regulatory framework to do that. So in some cases, we're running it out of the asset management business. In some cases, we're just the service provider on the market side of the house. But there's certainly a lot of these.
Yeah.
And, they're all, each of them is trying to differentiate themselves with a little wrinkle some way or another. And so that's where we come in and can say, okay, do you want to stake? Do you want to, overwrite your position? Do you want to underwrite as a way to enter the market?
Yeah.
And so there's a lot of things that we can do from an institutional perspective and in a regulated fashion that I think people, get a lot of value.
Yeah, it's actually like for a new type of vehicle, it's one of the most right down our fairway, right? Our banking division can help take them public.
Yeah.
We can obviously buy, sell, trade, lend the underlyings. We can advise them. It's quite interesting.
Yeah, I mean, it really is falling into our sweet spot in a lot of ways where it's we can definitely add a lot of value to these. I think that the thing that you have to be careful of anytime that you're dealing with a lot of things is we have walls in place for reasons, and you can't you can't commingle, but we can certainly bring best practices, to the entire ecosystem.
Yeah, and where you land at Galaxy, we can bring the whole squad to the meeting, and maybe
and sometimes we do, and then I hear about it, Galaxy showed up with 82 people.
Well, we got a lot of offerings,
Yeah.
But if you end up working, the asset management is a good example, right? There's walls between the RIA and the
100%.
But if you end up working with that all helps Galaxy, and we have all those different things in house. I think it's one of the interesting things about working here. So one of the big questions people have about these treasury companies is one, how many can the market bear? Because there are. I mean, how many have you seen across your desk, you think?
We have a tracker. It's somewhere between 175 and 210.
Because we put out in our lending report for Q2, which came out in May, we tracked the ones we knew of, and that was maybe, I guess it was almost 2 months ago, but a month and a half ago, there were 35.
Yeah, no, there are, and you have to remember there's domestic ones, U.S. based ones, but we're a global firm, so we're seeing them.
Yeah.
The reason there's so many is, there might only be, one or two in Korea or, Japan, different places, and so you start to see these, and you're like, so we have the full breadth of that as a global firm.
It does feel like it's a little bit, reminds me of when I was doing crypto venture, there was a big trade that a lot of VCs did, a good trade for the most part, which was in 16 to 19, going to every jurisdiction and investing in the big crypto exchange or the first crypto exchange, right? Or there was, every market, the U.S. is a great example. From a retail crypto exchange, it's basically Coinbase, Kraken, Gemini-ish, maybe one or two others. But all these markets can certainly have one. They all need one. They might be able to bear two or three, and then over time, one has gotten the lion's share or even acquired the others. And then, so there's some internal consolidation. And then over time, there's the internationals.
Yes.
Binance and Coinbase go into those jurisdictions. It feels a little bit like that. Every capital market is a little different or may have capital controls. And so there's a reason for a MicroStrategy in many of them.
100%. And I think that, to your point, right now we're seeing this Cambrian explosion. To your point, we had 30 2 months ago, and we're at, 190 something right now, right? So, and that's what I know of. I mean, I'm sure that there's, others that haven't rolled into, or that are coming in as we speak.
Right.
So you're seeing this explosion in these, but at some point, I think you'll see there'll be certain winners that bear out, and either because they are outperforming. So, if you think about a proof of stake, say ETH or Solana or something like that, how are you producing your extra yield? Is it just pure staking? Are you, going on chain? There are a number of things, and someone's going to win the day. in each of these verticals, and then I think you'll see consolidation, and price is going to also be a driver of that, right? Like, we see them right now trade at a premium similar to MicroStrategy to what their holdings are. At some point, does this become, do you see this become a capital play where people are like, okay, I'm tying up my Bitcoin and therefore it's, I have to discount that because it's not accessible to
Stuck
me.
in there, yeah.
Right. So like what's that utility function? And so, I think there's just a lot of interesting plays here that you can, things you can do now and things you can be thinking about in the future as to how this works.
And then another question people have is, does this create systemic risk, like whether it's for Bitcoin or other cryptos? With, I think the question being, if the Bitcoin Treasury companies screw up, or if they obviously if they lose their coins, that's a problem. But no, more like if it trades at a discount, do they end up selling the underlying to buy back their stock to close the discount? Basically, is there a scenario where the Treasury companies puke coins, and that creates a cascade right in the market in general? Like, are you worried about that at all?
You have to be worried about the full area under the curve, so to speak, right? And so if you're looking at a tail scenario of these things all trade at a massive discount, I think at that point you're going to see one of two. If it goes into that 95th percentile in the distribution, and you start to look at those, I think that there's two avenues. One, they either trade at a discount and then they get bought up, right? And somebody, you look at a KKR, Barbarians at the gate, people are going to buy these.
So they buy them and they maybe sell the underlying to close the gap or something like that?
Yeah, or they buy them and then they syndicate it out and say, we're going to take the Bitcoin out of this locked vehicle and put it back into whatever. And so so it doesn't necessarily mean it's going to be sell pressure.
Right.
Where there could be sell pressure is if these things trade at a discount and people don't want to trade at a discount because you don't want to get bought. You don't want to become an acquisition target for a breakup. And so what you'll do is you'll sell some assets in your treasury and buy your stock, but that's going to be a gradual process. That's not going to be a risk off. We're going to tank Bitcoin.
Right.
We're going to like that. That wouldn't be the scenario here. And so, I don't think of it as a sharp risk. I think of it as something that's going to be well telegraphed. And so people will understand what's happening and why. Maybe the first one is like, the oh shit moment.
I think it's pretty much just if like Saylor had to sell coins, that would be a no shit moment.
Yeah, because he's so much bigger than all. These are all like little. Now, if they start to consolidate and you see some financial gravity there, or they get big, one or the other, then you have to at least start to pay attention to some of that. I think the other thing is, the other risk that people don't think about is, does there become, to your earlier point, a jurisdictional issue where somebody says these things are illegal?
Yeah.
Or there's a new, all of a sudden something like the 40 Act, where it's like, okay, you're a company that's in the business of acquiring other assets.
A fund.
Yes. And now you have to register differently, and then there's
changes the whole.
That could change the dynamic, but right now I think there's a pretty clear path forward, and things are.
Yeah, I agree with that. I also think most of them really are quite small in the scheme of things.
Yeah.
I mean, even if they raise $1 billion, it's still not Saylor. They're not all Saylor sized.
Right.
And I don't think most of them will be able to use debt in the same way that Saylor is, because they're new issues or they're in markets where that isn't really a thing, right? So the because that was the question people have had for MicroStrategy is like, well, he does owe debt. He's got some debt that he owes. And I was like, well, most of it's termed out to like 27, 28, like
there's a runway, and he'll be able to roll.
And the debt to NAV is pretty low still, but like, I think one of the things that was so interesting about strategy, I'll be polite here, I still call Block Inc. Square. So I hate it when they change it. Facebook, like, I don't know what Meta is. I hate it when they change names. Should never change your name, like.
Well, if you're winning, it's, like
right.
if nobody knows who you are to begin with, maybe you got to try.
But they had like a 20+ year existence as a publicly traded equity, so there were options markets, they were seasoned, so it was like a very different situation than like a reverse merger SPAC that has no history and all right, well, we'll move on. The Treasury companies is interesting though. That is that's new.
It's new. It's innovative. It's exciting in a lot of ways.
Yeah.
It's obviously very exciting for us, given we're a service provider.
It's a great intersection of the things we're good at.
So it's certainly
people have been bad. What's going to happen with these? You're supposed to know. I'm like, just to be clear, like, I mean, we got some ideas about where this might go, but like, this has never been done before. This
Yeah.
is totally new.
I mean, this thing they could all trade, at huge multiples, or they could fizzle, or what you could see is you could see volumes explode because you have all these people who are going to arb one versus the other, trade one versus the other, and
right.
and so even within it, there's an opportunity to differentiate yourself within that. So
There is. All right, let's talk a little bit more about the trading business in general. I know that we've obviously there's, for example, like you could sell. These are corporates that buy coins. Obviously, we interact Galaxy Trading with corporates and institutional traders like corporates. But what else are you excited about nowadays in GDT? I mean, I know you guys do everything that you can really imagine in trading, but what's got you excited at the moment?
There's obviously what we just talked about, but then you look at the lending business for us has been an enormous, has had some great tailwinds. I think as people start to realize that they need to either borrow cash or coin. Now, the market is so interesting. The market is flush with cash right now, which historically that has been like, if you had asked me any time in the last 10
way
years
cheaper to borrow Bitcoin than cash for crypto firms and crypto investors, right?
Yeah. Historically. And listen, it's still cheaper to borrow Bitcoin or
cryptos.
Depends on the staking and the other dynamics, but yes, generally. But cash has been dear, and I think that now that you've de-risked crypto broadly, new administration.
I was going to say, is that
rules.
Why there's more cash available?
Because people start to feel better about it, and what the markets are very good at, groups like us, coming in and saying, all right, well, I can borrow out of this regulated vehicle. I can turn my Bitcoin into an ETF, and I can post an ETF at a prime broker, and then I can get a cash release, and so on and so forth. And so, even though it's not always necessarily direct, over time it makes its way back to back into the ecosystem.
Yep.
So that's why you're seeing basis collapse broadly.
Interesting.
So people are getting more access, so that cash component that drives that is there. But that's been the lending business has been great for us. I mean, obviously, tokenized securities as
we're interested in,
something that we're interested in. I think that there's going to be a huge opportunity there in time, because you're going to have effectively two separate markets that are never going to be perfect. So at first it's going to be the big arbiters that are going to come in and just do large sizes, but in time you'll start to see the Janes and the Jumps and those HFT Flashboy shops are going to come in, and it's going to be tight and right, and that will be I think will be the exchanges, both sets of exchanges, TradFi and crypto, will be beneficiaries.
It's really
of that
quite
because,
interesting. I'm not. This is almost like Ahab's white whale, right? It's like the holy grail. We've all been searching for it for so long. It really, in a lot of ways, to me, has always made a lot of sense. Like you've got a automatically cryptographic decentralized settlement protocol in the blockchain, and it's most of the impediment is regulatory, and the regulation is complicated. It's quite complicated.
Our regulatory structure, partly because we are a fully international firm, I jokingly say it looks a little bit like a Jackson Pollock painting. You've got a square and a triangle and a circle and then arrows pointing, and you're like, and the reason we have to do that is
how many licenses do we have? Like, I don't know, an innumerable number.
It doesn't ever stop. And then, listen, those aren't cheap. That's part of why, we're in an advantageous spot, because, to just even think about doing some of these things, is multiple millions of dollars.
And some of the stuff that we've heard reported, and we wrote about, like Robinhood's thing with their tokenized securities, they're not strictly legal in the way that a firm like us wants to be doing it in a going through the front door with the regulators. So like this offshore like SPV tokenized equity structure, which I can't blame. There's innovation there.
There's innovation.
I'm not opposed to it. It's not legal in the U.S. to do it that way.
And the challenge to that point is that it checks the box, and there'll be fringe players who are a little farther out the risk curve that will feel very comfortable, and they will make a lot of money doing it until they
can't anymore.
Until they can't, or there's regulatory clarity that makes some of the larger players feel comfortable stepping in, and then you'll see that compress over time. But that's all markets,
and that's okay. And I agree with that. There's innovation there too, like some of these companies that are doing. either they put the stocks in an SPV and tokenize the shares of the SPV, or they are doing it like other ways. Like that's all interesting. It all does sort of represent progress and like sort of what we know, which is that driving wave of like it is coming.
It's coming. You see it, and it's just somebody's going to find a way that catches. I mean, think about back to the strategy conversation we were just having. Like Michael Saylor was the first to do it, and he was innovative, and he found the pathway that actually got
quite
this
brilliant.
100%.
I'm actually kind of shocked it took like 4 years for other people to try it. I think MetaPlanet was basically the second one.
Yeah.
And that was what, like last summer-ish?
Yeah.
But Saylor bought his first Bitcoin in summer of 2020.
Yeah.
I'm like shocked it took this long.
Well, here
but I'm not, because I didn't think to do it. But I mean,
no, 100%.
It's amazing. So to your point though, like this could start. It's like gradually, then suddenly, it could be that way for tokenization.
100%. Someone's going to find a pathway that to some of these structures that you're talking about. There is a lot of homework that has to go into that, right? What does the SPV look like? Is it bankruptcy remote? Like who's all those things. People have to do the work.
Yeah.
And then at some point, someone's going to do the work, and they're going to say, okay, this is cookie cutter. This works. Right. We all did it the same way as XYZ.
Kick the door down, and drive the car through
then it's off to the races. And so,
I think it's exciting.
So
that one really is, because one of the sort of risks that I've been seeing for broad crypto assets has been like, you've got Bitcoin, it's widely understood, people love Bitcoin, they want to own Bitcoin. You've got stable coins, which are widely useful. I think the market knows, and that is tokenization, by the way. You've got DeFi apps that, like, particularly like swaps and lending. They're great. They're quite useful, but most of the assets are shitty. Like in the scheme of things, not all of them, obviously.
You're right.
But I was like, I want to upgrade the quality of assets on chain, right? Like, and one way would be to get like real equities out there.
Well, I think that's your natural progression. I mean, we think about our.
There's like 30 million crypto assets, and surely like 29.9 of them are not good.
Yeah,
but that still leaves a lot of good ones.
There's still a lot of.
But I just mean like that's what I want to see is like DeFi be able to get used with assets that are better. Right, and for a lot of the reason there aren't better assets was Gary Gensler's fault, by the way.
100%. I don't think it. I think this is an area where it's not the industry's issue, or it's not the. It was truly a regulatory. There was a big shadow that was put over a big swath of the market, and so everybody was either forced to be a pure commodity or like a meme, like where you're a joke, and then like
That's
all the stuff in the middle. Everybody knew that it was there, and the technology. We have the technology.
Right. You
So,
couldn't offer any kind of like tangible benefit to your token holder, or you'd be illegal.
Exactly.
And so you either did it illegally offshore somewhere else, or you did meme coins only.
Yeah.
Right. It really is true. He boxed out. He made it impossible to register any kind of equity like feature.
And the true power of the blockchain in that regard is that you can do all this, programmatically, cryptographically secure, et cetera.
Yeah.
And so we're starting to see that, and as people get comfortable, I used to say back in the day when we were first evangelizing Bitcoin, it was like, all right, or crypto broadly, it took somebody, TradFi, some person 6 to 12 months to learn about Bitcoin, and then it was 3 to 6 months to learn about ETH, and then it you sped it up. And I I think that now with stables.
One of our old employees used to call this time to boomer. Do you remember that? It was like it used to. That it would take like a baby boomer a year to understand Bitcoin, but that this compresses as you go down the rabbit hole. You get faster at learning it.
And we're going to see that innovation take place. Like we're going to get, we're seeing a lot of growth in the stables, right? And then stables are going to become other financial products, and then so on and so forth. And that half-life as you go pretty soon, and that's how crypto wins. Like we've always said that crypto wins because it's just better.
Yeah.
Right. Like broadly, like the technology is better. And to your point, like some of the things that we see that are exciting, we're finally, getting live with our Prime platform, and simultaneously we're building on-chain Prime because we know our clients are going to want to, access, DeFi, go into on-chain, native solutions, and having a way to do it that's regulatorily approved, that's safe, that we've spent a lot of time doing it ourselves, dog fooding the process. And so that when someone shows up, when these large institutions who are generally our clients show up, we can say, all right, We've been doing this for 5 years. We're one of the largest on-chain participants, and we've vetted all these. These are the smart contracts, and being able to say, hey, if you want to try something, you can go out this curve over here, and we can allow you to do that. But this is your safe space here where you feel comfortable.
I love that. I think it almost feels like the on-chain environment, which you can call on-chain or DeFi or whatever, it's kind of crossed the chasm here where it's like people really, it is very useful. Like it's maybe not literally everything, but like there is stuff that people want out there.
100%. I mean, if we think about one of the powers of crypto broadly is democratization of finance. That we can get away from rent seekers at different places, which it's a little bit of an oxymoron because we seek rent by
We're
helping
an
people.
intermediary and a bridge to
Yes.
that world. But
Right.
yeah.
But if the purpose is to democratize it, what you see with DeFi and on-chain is you have a universe of people who are retail, right? And now they're able to participate in markets that they used to not be able to. And it allows people to get access because their risk profile might be different. And so now you have institutions that can access that pool directly without having some intermediary take the lion's share of the trade. So ultimately, the user and the supplier are truly the beneficiaries.
Yeah, and the lending stuff on chain, I think we think about this really well. Your team, we've worked with them a lot, and you know, we're researching it, they're using it and whatever, and you know, the lending team, their DeFi team, they started. It's been a couple of years of this, but they've started thinking about like these pools of capital are kind of just unified. Like if you want to borrow Bitcoin or cash. It's like you've got our counterparties who might want to lend it to us. You've got the banks or somebody who might give us cash, and then you've got the on-chain environment. It's all sort of part of the same thing now. It's sort of like facility. It's one giant facility.
And what you manage downstream from there, like that's the use case. Downstream, it's just understanding. Okay, I have an ISDA with a large bank. These are my concerns. I have smart contract risk, and I have to do the audit of the smart contract. But it's similar. It's just understanding how that works downstream. At the end of the day, if we're borrowing dollars secured by Bitcoin, right? Like, okay,
you can
like
borrow
what's
for
the rate?
This rate from here, right? Exactly.
What's the rate?
Once
And then
you
you risk adjust it. Like, okay, I'm
right.
You know.
Well, and there's a certain risk of one place versus another place.
100%.
But it is like on the menu of. It is truly part, like on-chain DeFi is part of capital markets. It's not its own capital. It's part of it.
We used to think about it, and maybe I'm partially to blame, some of the regulatory backdrop, but you'd say, okay, we have on-chain and you'd have other, right? Now it's like, okay, if I need to trade a future, right, I can go to TradFi exchanges, something like the CME, wherever. I can go into crypto native, Binance, and now I can go into on-chain applications, and I just have to compare each, and so I can be capital efficient. If I've had a client come in on the other side, and I have capital that's sitting in say an on-chain universe, it's actually cheaper because I don't have to move it. It's there already. Or if I have a TradFi application where I'm on CME and I'm like, oh, I got a client that this client bought and this client sold, and I can marry them up there. It just gives you more choices.
It's very interesting, that is a democratizing force also.
100%.
You can see
keeps
that,
everybody honest.
I know, you can see that TradFi is, they're on a range of a spectrum of emotion about this. They're interested and embracing, but also, for example, SIFMA, which is the securities industry primary lobby, which is, we would like to be a member. We are in the securities industry, of course, as well. But it's all the big financial service companies, big lobby. They wrote a very angry letter to the SEC about like tokenization of equity securities, basically saying, please, let's pump the brakes here, which again, it's not surprising. I mean, like, because this is a democratization question.
It takes from the power, from where the power currently resides, and we're distributing it downstream to where the money actually really resides with the average person. And so those rent seekers clearly don't want to have to deal with that.
And they'll be around. They're going to figure out how to play there.
They have a massive role to play in it. And it's interesting because as we talk to all of them. Yeah. And you have
they're all very interested in it.
Yeah, and they're extremely interested. Yeah. And then you find pockets of people inside those organizations that just totally get it.
Yeah.
And you're like, that's great.
It makes sense because, like, this is the same thing I used to say that, the St. Louis Fed has put out phenomenal research about Bitcoin. Like, there's guys there that love Bitcoin and think it's super interesting, which shouldn't be surprising because they're in the business of money And Bitcoin's a very interesting monetary phenomenon. So it shouldn't be surprising, but it is you still. That's the other thing is like we have the dual regulators in the U.S., the commodities and futures, and then the securities. We're like the only country in the world that has this split. It's very stupid in a lot of ways. People have wanted to fix this for years, but there's tons of reasons why
yeah,
not.
there's a myriad of reasons. But what's interesting, when you think about that, when you think about the bifurcation of the regulatory framework, you think about a lot of the different elements. We're in this time of tremendous change right now.
Right.
Globally, if you just think about it like politically, geopolitically, there's just a lot of
It's been like generational, right?
Yes. You've got the baby boomer. You've got the baby boomer, demographic that's rolling through, and then you go to millennials or the next one, right? And so they're going to drive outcomes, and so that's going to push things. That's going to cause more change. Which at that point, when you shake up the snow globe, the thing that's the best is going to come to the top, and crypto. Blockchain is truly the best. It's just way better.
Yeah, it is. It is in a lot of ways. All right, before we wrap here, this has been a fascinating conversation. Before we wrap, let's talk a little bit about international stuff. You mentioned how we're a global firm, right? We have offices in Hong Kong, London, Tel Aviv, Chicago, New York, the Bahamas.
Yep.
Am I forgetting any major? I don't think so, right?
We're opening a few more. I just left the meeting.
Nice.
We're opening a few more
Internationally.
internationally.
So you're all over. How do you see what's exciting internationally? Is there particular demand in certain jurisdictions, or what?
Yeah, I mean, kind of to pick up on the democratization front. We're seeing. I guess you have your traditional stalwarts where you have APAC broadly.
Yeah.
You've got the China funnel that comes through Hong Kong,
diaspora
and then
there,
and then you've got Singapore.
They've loved Bitcoin and crypto forever.
Forever.
Yeah.
And so you've got that, and so we're leaning in heavily there. That APAC office continues to we have to get a new one.
I was there. We went last year with you.
Well, we're getting a new one that's got to be twice.
It was
twice
pretty
the
tight,
big.
actually.
Yeah,
It was already pretty
that's
full when we were there. I was there in September.
Yeah, that's why we need to get a bigger one. It's just keeps growing
Nice.
because there's opportunity.
Yeah.
But what's interesting is that democratization piece. We're seeing a huge growth in LATAM. We're seeing huge growth, or at least green shoots that can grow into giant oaks out of Africa. The Mideast continues to embrace, and it makes a lot of sense if you think about. I jokingly will say, and not in a pejorative way, but in a real way, the Mideast in a lot of ways is like the bottom of the drain in the bathtub. You've got all this money flowing from China. You've got all this money from the West flowing in. And so you have a real, so we're making a really concerted effort to grow that.
Yeah, and it's kind of like the Emirates and the GCC. I don't know why I'm using the security. It's the Gulf Cooperation Council. But, the Middle East there is kind of like the new Switzerland in some ways too. It's sort of this fulcrum between East and West,
and that's why because that is the bottom of the drain. If you're East, you don't necessarily want to. If you're in the East, you don't necessarily want to run all the way to the West to bank like we did 40, 50 years ago. I mean, that was something different. Now it's hey, I can diversify my holdings.
You got a capital center. It's geographically central. They have energy there.
Yep.
They're business oriented, right?
Yeah.
It's really interesting. That's a huge story that I'm not that intelligent on, but I should probably learn more about. Because
we can talk about it offline. We've got some big plans there.
Yeah.
We've made some good strategic investments and have good partners there, but we're leaning in even more so.
Yeah. Cool. That's exciting. The APAC, but also the Middle East. I guess it's part of our. What do people in bank call EMEA?
EMEA.
Europe and the Middle East and Africa.
That's
pretty that's what the bankers always say for that. It's like you're gonna put 3 giant continents in one guy's remit.
Just slam them in, and now you're in charge of this. Go make it happen.
Yeah, exactly.
Very different, but that is one of the again powers of us and Galaxy is that we can operate in all these jurisdictions legally and with people on the ground, boots on the ground that know the culture, know what matters, and really engage with our client base, with the markets generally, because you never really know where something's gonna happen or how. These ideas kind of, they start off as just like a little nothing, and then before you know it, it's a real business.
Well, I think it's it's one thing I've always been excited. I mean, granted, I'm a big firm guy. I mean, I came from Fidelity. Galaxy always feels like it's a big company, and we got a lot of interesting stuff happening. an enormous amount of it in your business, which makes a lot of sense, by the way, because, getting access to trading, hedging against borrowing crypto is at the core of pretty much what everyone is doing.
Yes.
And so I'm always excited to talk with you, Jason. All right, real quick, I was going to throw this on you. I'm always bothering Jason about his time in the commodity pits in Chicago. And one of my favorite things about that is that you guys, it's back when it was a big thing, it was a big, giant mass of people trading, yelling to each other, and you can't hear. So when you would trade, you'd be yelling to a broker or something across the room or something. You use hand signals
all the time.
If I wanted to say, like, buy 100 Bitcoin, if you wanted to sign that to me, like, how might you say that?
I mean, I'd be like, hey.
Or let's say it's even better. It's like Merrill Lynch. You're brokering for that. Merrill wants to buy 100 Bitcoin. What would you? How would you sign that to me?
I'd be like, Merrill's working to buy 100, BTC, whatever. Goldman, gold ring. Goldman is working to sell. Market's 2 bid at 4.
I would be able to just see you mouthing it, but you'd also be hand signaling
it. And then if you didn't see it, like, hey, one more time or whatever, and I'd be like, Goldman is working to sell, that's.
I really wish we could bring this back in some way.
I mean,
can we start doing it on the floor here? I mean, there's got to be some way to.
I don't know that we want that. Bitcoin is progress. We don't need.
That's fair. All right, my friend Jason Urban, Galaxy's global head of trading. Thank you so much for coming on Galaxy Brains.
Thanks, Alex. This was great.
That's it for this week's episode of Galaxy Brains. Thank you to our guest, Jason Urban, Galaxy's global head of trading, and Michael Harvey from Galaxy Trading. Everyone have a safe and happy weekend, and we will see you next week. Thanks for listening to Galaxy Brains, the weekly podcast from Galaxy Research. If you enjoy the show, please like, rate, review, and subscribe wherever you get your podcasts. To follow Galaxy Research, sign up for our weekly newsletter at gdr.email, read our content at galaxy.com/research, and follow us on Twitter at GLXY Research. See you next week.